Good morning. Thank you for joining our next thought leadership event, our little webinar here. Today we're going to be talking about maximizing tax credits and how you become eligible for those tax credits, how you apply for them, the business advantages, not only from a financial and a tax credit point of view, but also from an employee engagement and culture and return on investment point of view. And so a little housekeeping items before we get started. One, if you've got any questions that you'd like me to ask the panelists, there's a chat function in the webinar software. Just pop your question in there and we'll get that over to the panelists for them to answer your question. So without further ado, I am privileged to be working with this panel today. We have Jeff Heath, who is a managing partner and outsourced risk manager at IOA, Insurance Office of America, which is the fourth largest privately held insurance agency in the nation. Jeff specializes in risk transfer, risk financing, and risk management, which makes a substantial impact on the bottom line for his clients. Jeff provides a full team approach to implement the risk score process and reduce his clients' risks, total cost of risks, while also managing risk in a long-term plan. And Jeff's team is here to stay ahead of all the emerging trends and manage the entire process with his team and yours. He is the quarterback of the entire team and works together toward reducing your total cost of risk and insurance spend. And we have Nicole Devine from PBO, and Nicole has over 15 years of strong HR background and also co-founded a small startup CPG company, which has added invaluable balance to her business acumen. She's been accountable for all aspects of business and is well positioned to see the human capital management component from every department's perspective. As a consulting chief people officer here at PBO Advisory Group, Nicole works closely with client leadership teams, allowing her to progressively align HR objectives within any organization. And last but not least, we have Uri, and Uri established Carrazco Innovative Tax Solutions, which is an accounting and tax advisory firm focusing on bringing unique and innovative tax solutions and management strategies to businesses of all sizes in any array of industry. With Uri's leadership, the firm has enjoyed tremendous growth since its inception in early 2003 and currently boasts a roster of over 3,000 clients, including over 2,500 clients in the tax credit and incentive practice. He saves clients millions of dollars of taxes annually. Uri has cemented himself as an expert in the industry, including the federal and state hiring credits, research and development tax credits, cost segregation, employment training panel incentives, ERTC credits, and many others that we're going to talk about today. So without further ado, I'm going to turn it over to Uri, who's going to talk a little bit about tax credits, and then we're going to launch very specifically into some specific tax credits.
Awesome, Fran. Thank you, and welcome everybody. Good morning, everybody, from beautiful La Jolla. Thanks for tuning in. So yeah, as Fran mentioned, my name is Uri. Full name is actually Uriel, but everyone calls me Uri, so feel free to call me whatever you want. But at any rate, been a CPA now for 26 years. Started my career like most other bean counters do. I was part of a big 5 firm until they became the big 4 after Arthur Anderson went down to blaze of glory, if you will. But at any rate, I was with KPMG for 2 years and cut my teeth in audit and that type of deal. But then got a rotation into business incentives and kind of took to it. So about 24-ish years ago, we started a firm to focus specifically in the area of tax credits and incentives. And so because we're specialists, if you will, I call it the heart surgery part of the tax world. We're create relationships with CPA firms themselves, even though we have CPA license licenses at our firm, we're able to work well synergetically, if you will, with other firms and be that arm that they need, if you will, for all this stuff that's in, an inch wide and a mile deep in the tax code. And so today, we're going to talk about just a few of the many different federal and state credits and incentives that are out there. For California specifically, there's some of the kind of best kept, and less used, if you will, credits that are on the table, and it seems like businesses continue to just leave those dollars on the table. So this slide here just gives a little one pager on the variety of different credits and incentives that are out there. It's not an all-inclusive list by any means, but as Fran was mentioning, we did a lot of the employee retention credits. We do a ton of the research and development credit work, especially because there's some quirky rules with, I won't bore you with accounting mumbo jumbo, but the bottom line, there's a lot of nuances with how expenses versus credits work with the 174 amortization. I already feel like I'm nerding out on that, so sorry about that. I'll move along. But at any rate, there's also the work opportunity tax credits. What I call the California's best kept secret is the new employment credit, which we'll definitely touch on today. There's California competes credits that are out there, as well as things like Section 190 cost segregation type of studies that accelerate your depreciation for purchases of facilities and the such. So it's a way to capitalize on time value of money as a business, if you will. So, and then of course the other kind of best kept secret, in my opinion, it's actually not even a credit. It's more of an incentive that California has called the Employment Training Panel, and that's a reimbursement essentially of your training wages, which we'll go into a fair amount of detail on these credits and incentives, the three, if you will, on the next slide. So you want to move that one along there, Fran?
Yeah, absolutely. And so, what's really amazing to me is that we've got these incredible opportunities for tax credits that allow us to invest in our people. And so, Udi, if you can talk a little bit about each of these tax credits and what they are, and then, maybe we can have Nicole and Jeff weigh in about what are some of the other benefits other than just, the tax incentives, because I think that there are many.
Yeah, absolutely. There is, and to speak to the three that we're talking about today. The first two are really hiring-based tax credits. So effectively, the federal government as well as the state of California provides an incentive to businesses in the form of a dollar-for-dollar reduction of your federal and state tax liabilities if you hire employees that meet a certain set of criteria. Now, each of those two programs, so I'll kind of go in and out of the federal work opportunity tax credit, which is a WOTC, as well as the state new employment credit, or NEC, because they're really very similar in the way the process, if you will, is rolled out, or the dynamics of the program, with a couple of little differences. But so where I was going with that is both federal and state, again, provide a reduction in your tax liability if you are providing employment to folks that meet a certain set of criteria. And so the idea behind it is honestly that it's somewhat of a win-win, both to the employer as well as the federal and any of the agencies, if you will, that provide various different types of aids to employees. So the qualifications for qualifying an employee can be things like, for example, if an employee was unemployed for an extended period of time. So let's pause there for a second and think of how that's a win-win for the government as well as for the employer. Well, if the employee has been unemployed, likely receiving unemployment benefits, right? That is paid by the government, right? But the second that you, as an employer, give them a job, the government's enticing you to hire that employee, and then you get this tax credit as an employer. And what they get in return, if you will, is a person that's no longer on unemployment benefits. Because the second you get a job, you can't also collect unemployment benefits. So a lot of these, qualifying criteria are kind of a twofold benefit. There's the benefit to the employer, but also there's the benefit to the agency or the government agency, I should say, that's paying out the benefits. So other qualifications, we do a ton of business with construction and manufacturing folks, if you will.
Okay.
So a lot of times we find that an employer hired an employee that is out working, and maybe they have spouse and kids at home, and they're receiving some sort of aid, right? Medi-Cal or the such, right? And so there's a qualification for these programs that if that is the scenario with the employee you just hired, that you as an employer get the tax credit. So again, same thing, right? You're providing employment to somebody that if they start making that income, all of a sudden it benefits the government as well, because they don't have to pay out the dollars in these benefits, right? So that's on the very, that's what it is.
And so from a very practical point of view, Nicole, maybe you can speak to this. Is there a way to attract that talent, and or how do we make sure that we're staying in the compliance lane of HR while also recruiting for these types of eligible applicants?
Yeah, thank you for that. So I wanted to add one other benefit to what Udi was saying with respect to not just the government, but the employer benefiting for those who are on unemployment, et cetera, but also benefits the employee, right? So they're back in the workforce and they're pushing money back into the economy. We're able to grow, right? And so there are huge culture impacts, right, when we go and align to go after certain targeted groups. And so from a recruitment standpoint, there are specific agencies, actually, as you look at talent shortages and as you look at strategic pipelines and partnerships from a recruiting perspective, that you can go after and target specifically in order to create pipelines so there's incentive. So when you're looking at it from a human capital perspective, it always comes in alignment with what's the return on investment from the investment we're making in capital and our people, right? So there are specific agencies, state agencies, other groups that actually curate and actually have done a lot of training in the EDD departments, et cetera, who curate these pipelines of talent because their entire incentive is aligned with yours, which is let's get everybody back to work, get them back into the pipeline of being gainfully employed. And so aligning yourself from a strategic model, especially those who are nuanced, where the technical skills, for example, are challenging to find, if there's certain niche industries that have challenging skills to find, things maybe that are on their way out, right, in terms of skill sets that are harder to find. Those are really good partnerships to be able to align yourself from a strategy standpoint, to be able to funnel and build pipelines. So, the talent market is supply chain, right? The supply chain is good, right? On the talent side, it really is a demand, supply and demand issue, right? So it's a really good way to insulate yourself from being able to go out specifically and align yourself to those markets, so that the whole goal is to open up your ability from a diverse talent pool to make the best decision for your organization, whatever that might be.
So, Michael, can you go back to the first slide for a moment? So that's really the work opportunity tax credit. Is that also the new employment credit? Talk a little bit about that. Is it similar in terms of, you mentioned it's for employing an eligible population of applicants. So what is the difference between the two of them?
Yeah, really good question. So, dollar value on the WOTC versus the NEC is significantly different. So on the WOTC, one qualified employee can max out up to a $9,600 dollar for dollar tax credit on the business return. Even if you're set up as a flow through entity like an S corp, it'll land on your individual 1040 as a shareholder, right? So if you were going to owe $10,000 in Fed tax, now you owe $400 in Fed tax, right? So, pretty straightforward that way. It's important to note it's not a deduction, it's a credit dollar for dollar, right? So that's a much bigger impact. The NEC differs in the dollar amount significantly because, and in the way you compute it. WOTC is more of a 1-year credit. There's one qualification that can span over 2 employment years. But again, not trying to get in the weeds of the accounting stuff. But on the NEC, a qualified employee can generate tax credits for you up to 5 years. And the amount or the total that you get of a credit is a little bit of a moving target because it moves with the minimum wage of California, which we all know has been going up and up and up, right? So at the moment, if you take the minimum wage rate that we have today, say it didn't move and you qualified somebody today, right? You could get up to about $116,000 in total tax credits for one qualified employee. This is why we have tons of our clients that pay and haven't paid California state taxes in forever. So yeah.
Okay, so NEC is a California credit and work opportunities a federal.
Yeah. The other wrinkle though that's important to note, and it's actually really crucial in the state program. This program requires that either A, you have a location, a brick and mortar spot, if you will, within a certain designated area, call it a DGA, designated geographic area of California. Or, again, I mentioned that we work with a lot of construction companies. If you also have locations for your job sites that are in the DGAs, we can qualify based off your job locations for the employees that qualified at those job locations. And so that's super crucial for construction companies because some of them like the pretty headquarter office that may not be in the DGA, right? But their jobs are out in the field and we could still give them some qualification and a lot of tax savings.
Okay, very interesting. So tell us a little bit more about the employee training panel.
Yeah, so like I noted initially, this program is actually not a tax type of program. It's a reimbursement effectively of your training dollars is what it is. So California has a fund that they created. My opinion as to why they created it was the employment force or the employee force, if you will, of other states was kind of kicking our teeth in. And so, they were luring good quality, folks, if you will. Nevada was, and other neighboring states were luring some of these folks over with, additional training, building skills, et cetera, And California finally decided, hey, enough is enough. We have to come up with something that entices the employer to hire, and keep those employees here, even if they have to pay them a little more wage, right? So they created the ETP fund, if you will. In a nutshell, to keep it simple, all employers participate in contributing to the fund. They may not know they do, but if they look at their, unemployment and what they pay in their unemployment rates, if you will, there is an ETT amount that they're paying in that equates to about $7 an employee per year. So everybody contributes, including ourselves, right, as a CPA firm, but not everyone gets to take out. So the fund prefers industries such as construction, manufacturing, trucking, et cetera, right? There's a whole kind of list. That those are the preferred applicants. And what they are applying for is essentially, as they're training their employees, security trainings, on the field trainings, you name it, the employer is paying that employee their wage while they're doing the training. California's ETP fund reimburses some of that training, some of those training dollars. So the client will actually get a physical check from the state of California as a reimbursement of some of those training dollars. Here's the kicker to this program. There is currently a surplus in the program. The word surplus doesn't exist in California for the most part, right? And so, so the reality that there is a surplus just basically means get it while the getting is good, because there's not always a surplus. And so there's a whole process of applying for that you should consider.
And so, does safety training, is that eligible for the California Employment Training Panel?
Absolutely.
Okay.
It's all here, Fran, to point out what doesn't qualify than what does qualify.
Oh,
because I can tell you that 85% of all the trainings that you do will qualify. The process, again, that's in the nuts and bolts for getting your reimbursement. You know, to put it in a 10,000-foot view, there's an application process, and then you got to submit signed rosters by the employees that they completed these trainings. So yes, there's a little bit of administration in what you have to do, but at the end of the day, that's what, you know, we're here for, if you will. But at the end, but that being said, the type of trainings that don't qualify are like mandatory type stuff, like sexual harassment training, for example. But outside of that, everything pretty much qualifies. So it's easier for me to say all of it's going to qualify, besides like a small percentage of stuff that does not, right? And everybody that I've ever, you know, had brought on as a client, everybody trains their employees in one way, shape, or fashion, right? And so to me, it's like you're just leaving money on the table.
Yeah. So, you know, that's very fascinating because those particular industries have a lot of required safety training. Jeff, you can probably speak to this. And so those required safety trainings, I suspect, are helping the company culture to be more safe, which would probably impact their insurance premiums. Oh, you're muted.
There's a ton of benefits to the training. Safety culture, first of all, you're going to be able to attract and retain better employees. They're going to feel that they're growing on the job. They're going to be able to grow into other roles, have advancement in their job. That's going to also reduce your total cost of risk because you're going to have less claims. You're going to be able to show that when you're negotiating your insurance, your broker should be showing that to your insurance carriers that, hey, we're doing 150 trainings for 15, 20 employees a year, whatever it is. You know, we do a weekly training, be able to show those trainings that are done that you provide to UDI or that are tracked online through a learning management system. That's going to get you much lower rates because most people are just checking a box saying, yes, we do training. Yes, we have a safety program. But, underwriters are not dumb. They want to see the proof. Here's the proof. We are doing it. We're taking advantage of these training funds. That's a huge value to every business owner, especially in the construction industry.
Yeah, Nicole, maybe you can speak to, the culture and the investment of, spending dollars on training and a safety culture and those cultures that really add value, the intrinsic value that's not the, saving money on insurance premiums and getting, reimbursement of dollars, but, that non-dollar value that we see.
Yeah, thank you for that. So there's actually from an obvious standpoint, right, pragmatic standpoint, like the employee engagement component as it relates to culture and how we invest in our folks and the brand output of that, right, of like who we are as an employer in the world. Those things really resonate with talent. And I think what's really critical to talk about too is, the upskilling and the reskilling investment that is required. When you look at any of the data reports coming out from the larger consulting firms, a lot of them have discussed the importance of the reskilling and the upskilling as retention for employees. And so from an employee perspective, you really want to align yourself when you feel valuable when employers are investing in you, because you're competing effectively from an employer standpoint with the rest of the world, right? In terms of keeping your talent in-house and keeping solid folks in-house and keeping them safe and educating them on how to do that. And so creating things like career pathways so people actually can visualize their path, right, with you internally, because again, you need to illustrate the runway that they have with you, and investing in them in training, skilling, whether that's business skills. There's a variety of different ways we can invest in our teams, but also even from a lateral movement, right? So people think that movement's only up, but there's also ways to laterally move our team to make sure that there's some career mobility and some function. And even as it relates to workers' compensation and that type of safety, that mobility training is really critical, because if you get injured on the job, we also need some alternative places to put you within our workforce to get you back to work, which again reduces your rates. So for all of those things, from an employee perspective, the feel good is that the way that the companies invest in us and the way that they provide value to us is to show us that they're vested in our personal interests and our career growth. That's not just on the safety side, but also in our actual career growth within a company. So a lot of the reports, especially as it relates to like AI and all of those things, right, that come in for your jobs, et cetera, the skill set needs to begin to pivot, and we need to be able, from a workforce plan, begin to account for those things. And it's important to employees that they realize they're not going to get replaced. On the employer side, I will say too, one of the other advantages for incentivizing in this way is it actually builds a pretty good story from an M&A perspective, and from an investment perspective, right? So when from a shareholder value and from an investment perspective, those bigger players begin to see that not only how you invest in growing your folks internally, but also that the compliance is in there, and that from a culture perspective, you really are doing everything that you can to align programs that keep re-emphasizing investment from the moment we reach out to our employees, from a recruitment standpoint, all the way through their life cycle. So it's important to see that that's also a big impact as well, and it builds the value of the company.
So, I mean, these seem like no-brainers. We should all be looking at ways that we can become eligible and apply for these credits. So, can you talk a little bit about that, Udi? And what do you see as a typical process? I understand every company is different, but and has different situations. But if you could talk to that.
Absolutely, Brent. Yeah, and you're right. Every company is different. It's kind of a custom, discovery, if you will, when we first get started to see what they got going on. And even as we noted earlier in the presentation, there's tons of other things. I know our intent, just for those that are listening in, is to have a couple more of these on the other credits and incentives, so that, to your point, Fran, if their a situation individually is different, where maybe they're more qualified for R&D or cost seg or whatever, they can, get a little information on that as well. But with that said, as far as eligibility on the ones we're talking about today, the kicker on these is that they have timelines on them, especially the 2 hiring credits. So the federal WOTC has a 28-day window, and the state new employment credit has a 30-day window. And what that basically means is, from the time you hire or rehire an employee, you basically only got that time frame to go and request a certification. So there's a compliance element to this, right? You have to attain a certificate from the WOTC Center that essentially says, hey, I've reviewed the employee survey that marked that they were a veteran of the military. They absolutely do qualify. You, Mr. Employer, have now been issued a certificate, complying with that. But if you don't initiate that process and have it happen within a 28-day grace period, it doesn't matter if they fit every single criteria, you're getting 0, right? And so the same goes for the new employment credit, that you only get 30 days to get with. It's the same thing, but basically it's called a reservation at the state of California. And if you don't have that done with that time frame, then you forego any potential for qualification. So you have to follow these rules of the program. And because of that, actually, kind of sidebar, but we created a proprietary software internally that actually communicates with the government agencies and that allows for our clients to access our web portal and use their own credentials to upload information with respect to the employees and get that over to the processing center so that we can do it within that time frame. So, you know, that's really important on those two credits. As far as the employment training panel, I mentioned earlier that there's an initial application that you have to submit, essentially documenting what training you're already doing and what training you expect to be doing in the future, right? Then once you actually get an award, and a lot of our clients, mind you, it's not about if you get an award, it's when you get an award, right? And so, you know, these, especially in the surplus era, as I call it, right? And so then after that, the application, if you will, or the to actually get the reimbursements, you have to submit these qualified rosters that prove, if you will, that these employees did go through the training. But all that is just mechanics, right? Most people, I can tell you, we've done the stats, you know, 5 to 10% of your employees are going to qualify just by chance alone. At the firm, we have different ways to boost up that qualification rate. But if you do the math, say you have an employer that has 100 employees with 20% turnover, right? That's 20 employees, right? 2 of them qualify. Well, on the state side, it's 116 grand per employee, right? Is it worth applying for? I think so. So anyway, hopefully that answers the question a little bit in terms of the eligibility and the application of it.
Yeah. So on the training, employment training panel. So if you have programs like new orientation program training or cyber training already in place, you would have to note those first. So those wouldn't be eligible for reimbursement. And then it's really new programs. Is that how you see it?
Yeah. So employment training panel does not have a retroactivity function. However, you know, if you have a program like that, what you described, friend, it's very likely that either your existing employees are going to go through it, maybe an update on a year-by-year basis, and definitely your new employees are going to go through it for the first time, right? And so the fact that you have that in place is great, because even though you can't go back and get paid for training that you've done in the past, it's already teed up for going forward, so that as soon as your application is in and approved, you're starting to get those reimbursements because you're already putting your people through this program.
I see. So Nicole, do you, my brain is spinning because I suspect there's a lot of compliance or at least some processes we would need to put in place to make sure that we're compliant with the reporting and the paperwork, if you will, to get either the tax credits and or the reimbursements. Do you have a sense of best practice? I think there are some HRIS systems also that have some features and functionality for these programs also, if you could speak to that.
Yeah, absolutely. So I think there's some critical compliance stuff, right? And really, Udi is well positioned to discuss the specifics of the compliance pieces as it relates to each program from an administrative piece. But I think backing up a little bit bigger picture, I think the biggest piece is understanding your resources and who you, from an HR perspective, and who you need to align from a team perspective, whether it's Udi and his team. HRIS systems definitely have some processes and some application technologies, et cetera, that are in play. I'm not sure that they're as sophisticated as you might want, because when you get down to, for example, maybe some of you experienced the ERTC credits, and then when it came to audits, et cetera, right, and people coming back and getting information from some of those HRIS systems, et cetera, suddenly we couldn't get a hold of anybody. So those are some of the mishaps that we run into. So it's important to understand the strategic players and to understand how, from a compliance perspective, to build your team appropriately to make sure that you have it all together. So things as it relates to what can you ask, what can you not ask, right? So one distinguishing factor, I important to note on the WOTC is this program was actually built to align to EEOC guidelines, and it's actually built to align to incentivize you to target and actually widen the pool to incorporate these groups. So it's important to train your teams also to understand what you can say, what you shouldn't be saying. Those are things that firms like PBO or HR professionals should be accustomed to, aligned to, educating their hiring managers to, building it into their hiring practices. And then as you look at the onboarding process itself, leveraging the right technologies to help you record, report all of those things. It used to be, I think, a barrier of entry to use these programs because they were being manually administered back in the day. And so there was so much paperwork that had to go on and so much record keeping. And I actually think that's one of the hesitations on the HR side is it's like, oh man, it's just one more thing I'm going to have to do, right? And so that's what I think is the incredible value to somebody like Udi, is that it is helping streamline that, and then also codifying the standard operating procedures from a best practice to give clear, concise instructions on those things, filling out the paperwork, et cetera, so that we can make sure that we are actually getting the return on investment if we're going to put the effort in. So I would my biggest key takeaway for anybody on the call is to align yourself with the right strategic players to keep you in compliance, so that you're not using things like the WOTC as a screening tool, right, to sort of vet who you'll bring on, who you're not, and sort of keeping yourself in alignment with that, because it's like any government program, any law, it's a moving target. It's important to surround yourself with good players.
Yeah. Well said.
Got it. Well said. Very well said. So let's move to the next slide and talk a little bit about business advantages. And Jeff, I mean, you're seeing these programs in action with your clients and their training programs. So are you seeing an easy way for your clients to track these programs and then communicate that information over to you and your team?
So that's a good question, Fran. So what I recommend with my clients is having a learning management system, especially for the ETP, because that would, you know, they'll be doing their in-person trainings out in the field and all that, say your construction company, for example. But the learning management system, your onboarding training, your ongoing training, disciplinary training, whenever you have near misses, can all be done through there and easily sent to them through their email. Some of these systems, like ours personally, internally at IOA, you know, they don't even have to have an email address. So there's ways that they can set these systems up now where employees have access on their phones. So that's what I'd recommend, is having that set up, because that's a ton of training that you're going to be doing. I mean, onboarding, you know, if you're hiring somebody for a new role, there's numerous trainings they should take before they even get out there. You can knock out a ton of training right there. Xmods, I mean, it's big on your Xmods too, because if you're doing a lot of this training, you know, one, Nicole brought up a good point earlier, on your return to work program, getting an employee back to work quicker, even if they can't go out and do their job, they have a lifting requirements or whatever it is, they can sit there and they could do training about their job. I mean, there's a lot of training they can do on learning management system instead of the old cliche of sitting there counting paper clips. You know, sit there and do training and learn more about your job and make sure you don't have that injury in the future. There's a lot around that. And then Nicole made a good point too on the M&A I wanted to talk about. There's a lot of studies out there that companies that have a strong safety culture, low claims, low loss history, they're going to sell for 20 to 25% more than if they didn't. And we see a lot of deals that fall through because, you know, a good business owner that's working with their insurance broker, they're going to want to see all their claims or review it and tell them, hey, I wouldn't buy this company. Their mods are 220. You know, it's just not profitable. You know, you're going to be taking on all these employees, this bad culture. I wouldn't do it. So there's a lot of deals that fall through also because of that.
It's so true. You know, when you're in an M&A process, the due diligence, they want your Xmod history, they want your track record, and it says a lot about your company culture. And we all know workers' comp can be a huge line item for a business if we're challenged with our safety. And really, it's just the right thing to do for our employees, right? I mean, we want to keep them safe and healthy, and that goes towards retention and a million other things. You know, we want to make sure employees are safe first and foremost. So, yeah, very, very fascinating. I didn't even think about the M&A piece, but it's a due diligence checklist. They look at it all the time. And it impacts your multiples if you have lower insurance premiums, right? Okay, very fascinating.
Well, I actually just wanted to touch on that piece too, because even on the M&A piece, as it relates to the leadership, right, and the investment in the leadership and the succession planning, and all of that is about risk, but also ability to grow and to be able to do what we're saying that we can do going forward. So it has those benefits too that are built in.
Yeah, scalability. So let's go to the next slide and talk a little bit about your thoughts and ideas, Nicole, about these programs and how we communicate them in a way that, firstly, we increase engagement, but we're also ingraining these programs into our company culture.
Yeah, so we've talked a lot about some of the mechanics of sort of how to engage our employees and the story around that, right? And so I think part of it is oftentimes what falls off is the communication about what we're doing actively to our employees, right? To let them know in monthly meetings or even in analytics, like how things are going, right? In terms of what we're investing in and what that might look like even on a people analytics side of the house. And so from an employee perspective, you know, people want to understand even total compensation, right? So even those things that we can illustrate there of like all of the investments, a lot of employees really don't have a solid understanding of how much employers invest in them. And total reward statements are really ways to illustrate all of the levels of investment that we're making, because it's important to retain you and to upskill and to keep, again, like from a retention standpoint. So I think the biggest miss, quite frankly, is from a brand perspective internally to our customers, which are our employees on the HR side, is that just like you would brand to the external world of what we're doing in the world for sustainability, giving back to the community, being connected to the community, all of those things, those are all solid stories that should be told to talk about the level of employee engagement that we're committed to. And so to me, the biggest impact is the softer side, which really illustrates the communication to the employees. And then again, as it comes back to things like compensation and career pathing, those are most of the engagement ways, I would say. The other thing is that it really positions you to be considered an innovative employer. If you're looking at like research and development, I know we're not on that tax credit yet, but if things like research and development, or you're on things in terms of investing for learning new ways to do things, all of those things open up and begin to open up runway for employees that you may or may not have. So there are a lot of studies coming up about reskilling and upskilling and sort of what that will do in terms of the talent markets going forward, right? So the workforce planning will be a big piece of it, and educating your employees about how to be engaged and all of the efforts, especially we haven't even touched on DE&I, that any of the DE&I for those organizations where they place a high value set on those, really good way from an analytics perspective to illustrate the story of how much investment we're making and where we're actually really trying to make advancement in those areas. So for those of our clients who are really involved in the ESG side of the house, they really can also talk about sustainability and really giving back to the community and connecting in that way to be able to provide economic growth and to be able to give people back gainful employment, even as it results to vocational rehabilitation services, which is also people who come off of workers' comp, potentially go into rehabilitation services, really good to pull them back into the market also to have gainful employment. So that doesn't necessarily impact your Xmod, but it certainly helps the guy next to you and their Xmod because they're back in the market and gainfully employed. So it's kind of full circle.
It really is that, what we don't track and measure, we don't pay attention to. And so it goes more to this whole business management conversation. What are those KPIs that we're looking at, that we're communicating internally and externally, frankly, that build our brand internally and externally? I have clients that, in their quarterly meetings, they're sharing their safety records with all of the company. I have clients that are doing an average training investment per employee, in a given period. So it's this win-win. The tax credit piece and getting credits or reimbursement for dollars is like huge, but then for us to be able to take that information and communicate it to our folks so that we're building our brand, we're building loyalty, we're committed to our employees, I think is really cool. And sometimes we forget. I mean, I put my finance and, accounting hat on already, and I'm like, okay, let's just do the paperwork and get the credits. But we forget about the really true benefit to these programs and why they're in place to begin with. So it's super cool to me to have these programs in place and have them available to companies like all of ours, because it helps us be better companies at the end of the day. Very exciting. So
and maybe just one last point on that, Fran. Yeah, just to say one last point. The other thing too, when you're illustrating the story, what's really important for everybody on this call to remember too is, there is this return on investment at the high level and the tax incentives, the financials, right, so to speak. But the illustration and the way we cascade that message down really matters, and it's really important to review it from the employee's perspective and not just at the chief table, right? So it's really important to just sort of, as you cascade messaging down, understand the value that you're trying to illustrate and just modify the message.
Yeah, I mean, so Uri, do you have clients where they're getting feedback from employees on the types of training that would be valuable to them, and then they're incorporating that into their plan? Do you see that with your clients?
Yeah, of course. Yeah. Well, and there's just a more conscious effort by the entire organization, to kind of, as Nicole was mentioning, if you cascade the message that, hey, this is what our company culture believes in, this is why, this is the incentive we get for it as well, kind of be full disclosure and that whole deal, then you get buy-in from the employees, and then you start getting the employees saying, hey, this particular skill set is something that would really help me, and then you can tailor trainings in that direction, if you will. So yeah, absolutely. I've seen that before, where you kind of get started at the high level, at the C-suite level, if you will, where they care about numbers, and that's the room I'm typically in, right? But at the end of the day, if you bring in the right HR folks, disseminates down to all the way to the employees, and then that's when it's really a big win, right? Because everyone's bought in, right? And you could say that honestly about the hiring credits as well, right? Sometimes employees just kind of get fed, hey, we're doing this now. So when they get hired, they're like, what is this survey that I'm taking? What's this all about, right? So it's important to communicate and let them know what it's all about, and engage them in a manner where they're going to be supportive, right, of what's going on, and go from there. Yeah.
It's been hugely valuable for me as a consulting CFO to have Nicole sitting at the table with me, because you're really right. We tend to focus on the finance and the P&L impact, and Nicole raises her hand and says, okay, let's talk about the employees, because the employees are our company. They are, they at the end of the day make our companies, and they make our companies great. So, that has been a really nice balance, to have that HR, voice at the table. And, in addition to that, we have so many companies that are really committed to having, similar to what Nicole said, that DEI, but it's really about having our company represent the communities in which we live and work. And so the whole work opportunity tax credit and the new employment tax credit really forces us from a policy, from a tone, from a culture point of view, to have those conversations to say, how do we cast that net wider? Not only because we get tax credits for it, but because it then makes our company better. We have more diverse voices. We have representation of our population that we live and work in our company. So that's the stuff that makes us, go from good to great, I think, as companies. And why I suspect people hire folks like you guys to really help them navigate this, because it's, we get kind of focused on our lane, and it's really good to step back and say, okay, well, there are these opportunities, and how do we maximize these programs for all components of our business?
Yeah,
so Michael, can you move to the, go ahead.
I just chime in on your comment. I think that, for what it's worth, that is actually probably the most key comment of this entire presentation thus far. It's really, again, a synergetic thing, not only with the the clients, C-suite folks, but also with the HR folks. And I'll give you a perfect example, like in a real life example, if you will. But I had a cement contractor, and the owner is very entrepreneurial, let's just say that. And so he hires HR folks to handle that side of things. And so he came to me and said, hey, I like what's going on here. I like all this tax savings I'm getting. How do we get more of it, right? And so, to Nicole's point, there's places and resources where you could feed the pipeline. So I connected them with a group that I'm close with called Work for Warriors, because veterans of the military are qualified folks for these credits. Well, he had a big job that was going to last about 3-ish years, doing a big cement contracting job on a freeway. He ended up hiring about 20 veterans, saved himself hundreds of thousands of dollars in taxes, right? And in return, the employees are still there. And I mean, this is 5-6 years ago that he did this, saved all the taxes, but the employees are still there because, again, he brought on folks, he had their HR folks explain the message. Yes, they were getting benefits for the employer, but they understood what it was all about, right? And so that kind of synergy between HR and the bean counter folks, it's really important. So anyway.
Indeed, we get a little tunnel vision sometimes on the finance and the accounting side. So you mentioned this is a great example where you were able to connect organizations that fit the needs of your client and also fit the eligibility requirements of a program. So, can you talk a little bit about, is there a big lift in the reporting requirements for these programs? Do we need to be paying a lot of attention to record keeping?
Well, yeah, I mean, you are dealing with the government program, right? So unfortunately, I hate to say it, but everything's subject to audit, right? Back when I used to do compliance, I used to tell my clients, everything is legal until you get audited, right? So, I mean, but the matter is that, yeah, there's plenty of important compliance around it, right? And, shameless plug, but that's kind of what we do, right? We make sure that you're in line and have on the hiring credits, all your certifications in line, that your calculations are done correctly and the such, so that in the event that there's a review of any sorts, right? You have the backup support for how the employee's qualified. You have the backup support with payroll records of how you computed the tax credits and why they are accurate, right? And then furthermore, there's even clauses in our engagements, that's the shameless plug part, that says, that we defend our clients at no additional cost, because these things do get reviewed sometimes, right? And so that's part of the compliance as well. You get a knock on the door from the IRS or state of California and says, hey, you were gonna owe me $1 million, but now you owe me 100 grand, like because of the WOTC. Wait, what are we talking about here? And then at that point, the compliance is in full effect. We need to come in and support everything that we did. So yeah, there's plenty of that. And also in the employment training panel, there's plenty of that, compliance and reporting, if you will.
So Jeff, does those documents that Uri is really preparing, does that satisfy your needs as a broker in communicating with underwriters, or do you have additional requirements?
No, those would definitely satisfy, but more simpler terms. I typically, so shameless plug also, to use Udi's words, like if you're using our learning management system or like a Paylocity one, or you can take it, print the PDFs off, email them to us, and we can send that to the underwriter. But ours gives us a report, and we put it into our annual stewardship reports. Now this company did 500 trainings this year, 400 last year. They have 1,200 set up for next year. So it's all tracked, and it's easy to show the underwriters, this is what they did. This is how it has impacted their loss ratio over the last 4 or 5 years. It all correlates together. So it's really good, cool. Especially some people are like, well, what if we already have a bad loss history? We have a high bod. That's a great time to start, because if we can go out to market and show underwriters, this is what you guys are going to start doing. This is going to have a huge impact. This is what you were doing. This is where you're headed. That's a great time, because that's where we can see a huge impact, is whenever people are in a bad situation and we're trying to rehabilitate them.
Well, and the underwriters are looking at that, right? They're saying, well, obviously there's an issue, so what are you guys going to do to fix it? And so it does force the thought process in the program and formalize it. Which really, so Nicole, when you're working with clients and would evaluate a program like this, what would be your approach to implementing and then maintaining?
Yeah, so I think what's really important is a few things. One is the first thing I look at is the talent and the capability of the team that's actually sitting at our client to determine what players will be needed internally to help facilitate, champion this. I do think it's a really solid business case for HR professionals to begin to leverage for their CEOs, for their CFOs in order to implement. So I think that's twofold. One, I think one of the things of the commonalities of all of the panelists here is that our sole function is to make sure that our clients are supported, right? Whether that's us or another strategic partner. I'm going to take my earpods out.
Now you're muted.
Is that better?
Better.
Is that better? Everybody? Okay, so I think what's mainly important is that we surround ourselves with strategic partners that matter. And so the first thing from an approach perspective is I look at, do you have policy and the process in place? Do you have the internal teams who can help facilitate and champion? I think systems are huge in terms of technology because, like Jeff was saying, the LMS systems are huge. You need people who understand payroll and have compliance regulations in so that you're pulling accurate data. So that's my first approach, is to look at who do we have on the team from a talent perspective first. And then from a strategic partnership, what resources do we need to bring on in order, even if it's the selling the business case, right, to begin to implement these things, right, to be able to offset these things. So for my HR professionals out there who are trying to champion the training thing, who are trying to champion the DE&I, the value set, the communication. All of these things help build the business case to offset cost in order to be able to achieve some of the initiatives we're talking about. So I think that would be my first approach, is just to look at who are the players who are at the table. And like any resource professional should be able to do, is look at what are the talent and the resources needed to get it over the line.
Well, I am so shocked. It's already 10 o'clock. We've gone over time. So sad to have another one of our thought leadership webinars come to a close, because there's so much more we could talk about. And so likely we'll have you all join us again for another day to continue to talk about tax credits and how we incorporate those into our businesses and our management practices. And thank you very much, Jeff, Uri, Nicole, for spending your time with us today. Those of you on the webinar, please know that this will be available to you after this afternoon. Have a wonderful day, everybody, and we'll talk soon.
Thanks, everyone.